Everybody hear me? Press
Yes,
one.
yes. Can you make me host?
Yes, ma'am. We're going to start momentarily. We'll start in 2 minutes. 2 minutes, guys.
Reina Rata no le dices de comer.
How's everybody doing? Press one if you can hear me.
We can hear you.
Doing good, doing good.
Very good. What's good?
Amazing, amazing.
Good to be back. Good to be back. Time to get things crack-a-lacking. Okay. So we got the whole squad on here.
Yes.
That's what I like to see.
They can hear us.
Just mute your mic, guys, when you're not talking.
Okay. So awesome. Everybody make sure. Now let's take a look. Before we start, let's take a look at what's been happening for the week. Okay. Yes, sir. So let's read. This is what today is what, October 11th, right? Gold prices continue to drift lower as the U.S. dollar continues to gain strength and market sentiment favors the highly likelihood that the Federal Reserve will continue on its course to begin tapering. It is set to asset purchase as early as November of this year. Now, many analysts have cited three primary variables for a recent downside in gold. The two that we have just mentioned, a strong dollar and Federal Reserve tapering. The third catalyst is rising yields on the 10-year Treasury notes. That being said, the U.S. Treasury notes are not trading today due to a holiday. They've been rallying to higher yields recently. The higher yields are a direct result of market sentiment leaning towards the Federal Reserve getting the process of tapering their asset purchase this year. Okay? So the third catalyst is rising yields on a 10-year Treasury note. That being said, 10-year Treasury notes are not trading today due to holiday, but they've been rallying to higher yields recently. The higher yields are a direct result of market sentiment toward the Federal Reserve and in the process of tapering their asset purchase this year. Okay? What is the most? The jobs report I've just released. Okay, what is the most interesting is that the jobs report that was released last week came in much under the forecast by economics polled by both Dow and Reuters. The numbers were lower than the month. The numbers were lower than the month. This is disappointing of August, which indicated approximately 243,000 new jobs were added. September jobs are approximately 194,000, with forecasts expecting between 450,000 to 500,000. Nonetheless, even with extremely tepid economic recovery seen by the low numbers of new jobs added, gold continues to trade lower. So gold should be continuing to trade higher in that case, but it didn't, right? It traded lower. Now, one of the reasons why is because it says here, read carefully, September jobs were approximately 194,000 with forecasts expecting between 450 and 500K. Nonetheless, even with extreme tepid economic recovery seen by the low numbers of new jobs added, gold continues to trade lower. So when the economy is not doing good, when the economy is doing good, right? When we see jobs being added and the economy is doing well, then we'll notice gold is going to go down. When the economy is doing bad, then gold goes up. In this case, it's the total opposite, right? The dollar has become the safe haven asset as yields rise in debt instruments of the United States. However, I don't believe this is the only reason we will see the recent decline in gold, even when there is data supporting the higher pricing. Okay, so people say they don't think that they'll see a rise in gold. Okay. Now, oh, here we go. One possible reason gold continued to decline is the incredible ascent of cryptocurrency Bitcoin. Bitcoin futures continue their dramatic rise, gaining 2,750 today, an increase in 490. With a single coin now valued 57,000, the chart below is a comparison chart with Bitcoin and gold displayed. Oops, my fault. Gold displayed side by side horizontally. One is created from a daily closing price chart, a Japanese candlestick, and a Japanese average chart called Heikinashi. I told you guys about Heikinashi. Heikinashi smooths out the trend, but we'll get to that in a minute. Both charts clearly demonstrate that as Bitcoin has been in a rally mode, there's a negative correlation with gold moving lower. In fact, at the beginning of 2021, gold futures were trading at approximately $19.20 per ounce, and Bitcoin was priced 40,000. By the beginning of March this year, gold hit a double bottom at approximately 680 concurrently. Bitcoin was trading well above 50,000, no matter what format used to create the chart. Be it a line bar or Japanese candlestick, they all clearly show negative correlation between gold and Bitcoin, okay? So you can also look at Bitcoin, which I've been telling you guys this, as a negative and positive correlation with gold, okay? And here, okay, perfect. Now we're moving on. We're moving on to the charts now, okay? So it's important to read news, and when you go to news, you want to definitely look at Forex Factory. Okay. Today is a bank holiday, so the market is not really popping as we would want it to, because it's a bank holiday. Okay. Like these gray folders, that's what the gray folders mean. They mean bank holiday. Everything else is yellow folder. Okay. Yellow folder is not as high impact news per se. But when you see red folders, orange folders, those are high impact news. So we don't see any red folders until October 13th, which is going to be on a Wednesday. And this is great. And a lot of people don't look at news before they trade, which is crazy to me. Okay. Now let's get to the good stuff, the juicy stuff. Okay. For me, and just welcome to all the people who are new to the 5-day course. For me, trading is almost like an art, right? You could teach people how to do it. You can give them the strategy. You could give someone the greatest strategy in the world. You could give them the system. You can give them the rules. But if they don't follow those systems, if they don't follow those rules, if they don't follow what it is, then they're not going to see success. So I know people will get on courses, not particularly saying this course, but they'll get on courses. It can be any course, a real estate course or whatever it may be. And they don't follow, they pay for the course and they don't follow the exact things that they're supposed to do. So I just want to let everyone know personally that if you are on this course, please make sure that you are following step by step every single detail and instruction given to you if you would want to see the reward. Okay? Press 1 if you hear me. Okay. Perfect. So, awesome. Now let's start. Me, I personally trade 3 different pairs, right? I trade
Esa
gold.
computadora,
I
Guillermo.
trade a little bit more, but USD Mexican peso, GBP JPY, US 30, etc. Okay. Mature 30 is also another pair that I trade, but mostly gold. And I like to trade gold because I look at it as like, you know, when you're trading gold, it's almost like you're going on a date, right? And you might be dating different people, but if you date a bunch of different people, you'll never get to know one person, right? It'll be harder for you to remember things. So if you went on a date with 5 different people, 6 different people, and they all told you different things about themselves, it would be really hard for you to remember every single thing in detail. Versus if you went on a date with one person and they told you everything about themselves, then you would honestly be able to recall a lot more things that that person told you or that person said or that person did or liked because you're focused on that one single person, right? Now, not to say that you can't trade another pair, not to say that you can have 2 dates, possibly could do that. But if you want to become a master, if you want to be self-sufficient, the best thing to do is focus on one pair. And it doesn't have to be gold. You could focus on XRP, you could focus on peso, you could focus on US 30, you could focus on NAS 100, you could focus on JUR 30 or NAS CAD. You can focus on whatever you want. But make sure that that's the only thing that you're focused on if you want to master. Once you've mastered that pair, you can then go to the second pair. You can then move on to the second pair. You know, each pair offers something different. You see, okay, you know what? Gold is doing good. Cool. Now I'm gonna whatchamacallit? I'm gonna be doing Euro AUD now. After you master the Euro AUD, cool. I'm gonna be doing Euro JPY. Master one pair. Okay. Each pair that you see in these charts, whether it's gold or GJ, every single one of them are like a zodiac sign, right? Every single one is like a zodiac. The reason I say that is because zodiacs, zodiacs have different characteristic traits. So you could go to somebody's zodiac and say, okay, Capricorn, Scorpio, you know, Aquarius, whatever your zodiac is. Drop your zodiac in the chat. Drop your star sign in the chat if you have one, which I'm sure you all do. So all these different personalities, right? That's what the zodiac states. Okay, so we see Leo's, Gemini's, Libra, Leo, right? So everyone is different from each other. Everyone has a different star sign, right? Now, even though they are all star signs, they all act differently. They all tell you like this personality is this personality is that, right? We see that, all right? Now with gold has its own personality, and that's why I love to trade specifically gold. Okay. when you learn about gold, you also want to learn about everything that it does. Okay? What it does on Mondays, Tuesdays, Wednesdays, Thursday, Friday, Saturday, Sunday. What it does at 1 a.m. to 12 a.m. Okay, make sure you're writing this down. Okay? You want to find out what gold does Monday through Friday. You want to find out what gold does from 1 p.m. 12 a.m. Okay? You want to find out what gold is doing every 24 hours. Okay? Press 1 once you write that down. And I'm going to write it down for you too, to show you muscle memory. You must be writing things down, guys. You must take notes. Okay? Awesome. What does gold do every day? What time does it move most every day? Okay? Does gold respects support and resistance? Okay? Gold moves 10 per pip. Okay? Gold is a wick market. Okay? Gold is inverse to most pairs. Okay? Gold is inverse to DXY. Okay? So these are all things that you need to be writing down about whatever it is that you're trading. For me, these are the things that I have written down about gold. What time does gold move every day? What does gold do every day? What time does it move the most every day? You know, gold respects support and resistance. I spelled the and right. Oh, wrong. Gold moves 10 per pip. Gold is a wick market. Gold is inverse to most pairs. Gold is inverse to DXY. So you want to start knowing these different things. Okay? You want to start knowing these different things about gold. Because why would you jump into a market and immediately begin trading a pair that you have no idea about? Right? So once you learn about the pair and you master the pair, then you can choose to marry the pair. Now, marriage isn't easy, right? Marriage comes with a lot of things, comes with a lot of arguments, a lot of responsibilities, all of that. But you can make it work if you want to make it work, right? And the same thing is with trading gold. You can make it work if you want to make it work. Not that it doesn't work. You could make it work. You just have to write down all these things and you have to follow these things and understand these things. A lot of you guys jump into US 30. Well, most of you don't even know what US 30 is. Actually, boy, you know where US 30 is? You know why they call it US 30? Oh, I don't know. Then why are you trading it? Don't trade things that you don't necessarily know. Okay? All right. Now, I'm gonna go off of some characteristic traits. So gold is a wick market. Okay? Gold respects support and resistance. Okay? Now, a wick market, what do we mean by that? This is a wick market. This is a wick. Okay? This is a wick. This is a wick. Okay? Wick 2, wick based. Wick based. Okay, everybody make sure you circle. Wick based. Okay? Now, what do you think that you could do with these exhaustion zones? Does anyone know? You can trade off of these exhaustion zones. You can find out where price is most vulnerable and learn how to enter and exit. based off of these price points. Okay, now excuse me for 1 minute. I'm just gonna go to the restroom for 1 second. Pardon me. Okay, pardon me. All right. So as I was saying, that these are the wick backs, right? So I like to price action is key for me. Okay, and one good price action book I would recommend, which I'll show it to you right now. It's Tina Logan Candlesticks. This is a really good book that you want to look at. It shows you all the breakdowns of like how to use a candlestick. It's really good. You can see the candlestick charting. It's one of the main books that I personally started reading to understand candlesticks more and kind of get a better perspective of them. Now, where was I? Okay. Now we see that price is here, right? Let's look at this for example. Okay. This is the price, okay, that we're entering at. We're gonna pull back here. Okay, make sure that your chart is on that. Okay. Now, when you're looking at something like this, the key to analyzing this is to first start with the checklist, okay? So we see gold as a wick market, right? That's what we're gonna look at. We're gonna look at the wick, okay? The key to starting is to have a checklist, okay? Before a pilot takes off, a pilot has an item, a pilot has a checklist that they go through item by item. You've never gone into a plane and the pilot just takes off. You've never sat in a plane and they're like, okay guys, we're going to India, we're going to Africa, we're going to Asia. No, that's never happened, ever. You always have a pilot say, hey, make sure your phone is in airplane mode, make sure your, seatbelt is buckled, your tray is up. There's like a list of things that you have to go through. So before you take off trading, remember, you need a list that you need to go through. You need to be thinking about how much money you're putting on the trade, you need to be thinking about, is it a good trade to take in the first place? Okay, so the first thing you do, okay, EV, evaluate, okay? First trade. Is it a good trade to take? Okay? If the answer is yes, if yes, then why? If the answer is no, then we don't take it. Okay? So if yes, then why? Right? One reason why I would personally take this trade, okay, which it looks like a good trade to take. There is a resistance in the past here, okay? And there's a resistance in the past, and there's a resistance here. One thing that you have to know about gold is gold respects support and resistance, okay? Gold respects support and resistance, okay? And gold is a wick market, okay? So price hit, now price hit. Now the difference between price hitting here and price hitting here, does anybody know? What is the difference between all of these three prices? I mean, all of these three resistance levels. Who can answer that question?
I will answer it.
Go ahead, tell me.
So the very first time when the market came to 1833, it tested it and then rejected, basically rejection of that level. Drop again the second time, basically similar idea. And the third time, basically the buyers were exhausted and it dropped. The seller took control and the price dropped basically.
Correct. This third one is an exhaustion. That's what it is. It's exhausted. So here we have buyers are so strong, right? Look at the candlestick. And this is why it's so important to read candlesticks. Is the buyers, the bullish sentiment is still here. Yes, it hit resistance, but the bullish sentiment is still here. The bullish sentiment is still here too as well. But we could see as the bullish sentiment moves from one place to the next, this is the first bullish sentiment. This is the second bullish sentiment, okay? We can see that the bullish sentiment gets lower and lower. Because look at this candlestick. Now look at the wick of this. Okay? You see how this is lower? Price is moving lower. Okay? Then we look at here. Look at this wick. Okay? This wick has exhaustion, so this means buyers are completely exhausted at this level. So this should allow you to know that price is vulnerable. So what I like to personally do is I scan the entire candlestick, so 254 points. Then from the top of the candlestick, since it's a pullback into the sell area, I show all the way down to the close, which is here, 240. So out of 240, out of 238, price wicked back 200 points. Is that less than half or more than half? Is that less than half or more than half of the entire body? More than, right? Correct. So if it's more than, I'm going to enter for a sell. But that's not just it. That's not just the first thing I'm going to do. The first thing I'm going to do, notice, is I put lines. Okay? I'm very detailed about lines and about what had happened at this area. So another question you want to ask yourself is what happened at this area? Okay? Is it a good trade to take? Yes. And then you say why. Okay? And then after we answer why, we get into, well, what happened at this area? That also is leading to the why. So we see two resistance. We also see that this was the highest point. So 1834 was the highest. 1832 was the second lowest. Then after 1832, we see 1831, right? 0.62. 0.62. So price just kept getting lower and lower. Notice, and you could see that within the candlesticks. The candlesticks tell stories. This candlestick shot up all the way here to 1834, right? Price shot down to 1832. At 1831, we see price starting to go down. And if you look at like 1830, yeah, 1830. Okay. These are like bank numbers. Anything that's like 300, 500, 600, 200, those are like bank numbers. So you could trade at these levels. So 1830.24, and then we see price was 1834. We see it was 32. Then we see it was, you want to put on this one too. 1831, 31.46. And then once it moves past here, we know that we can go in for the sell. Okay, and there's another level here you can put. This allows you to know also that you can cross more sells into this area because there is a long wick here too as well. So when price crosses 1824, you can cross into that area as well. Okay, does everybody understand? So first we put the zones, right? First we look at the resistance level that hit. Then we put the zones. Then we go back and look at what happened in this area. In this area, volume has moved through all of these levels. Volume moves through 1831, 1832, 1829. It has moved through all of these levels. So this is letting you know that this level is not powerful because sellers have broken through it. Same thing comes here. This level is not powerful because buyers have broken through it, okay? So it lets you know massive amounts of volume was moved through it. Despite it being respected is one thing, but there is volume, that heavy volume too, that moved through it, okay? And we could see that, 1831, 1832, 1831.67, 1829, and 1824. Okay. Everybody understand that? Press 1. My main time frame is higher time frames. Yes, I like to look at the 6 hour, the 4 hour, the daily, the weekly. These are the time frames that I like to look at. I'm not really on 15 minute like that. Unless I'm looking for like a super good entry. Okay. But my entry, if I had one entry, my entry would be here most likely. Here would be my entry. Why would my entry be here? Because of this wick back. This is 176 pips out of 176. 132 wick back, 134 wick back. That's more than half. So more than half of the sellers push down in this area. Okay? Now, what happened next? Okay? Here's my entry. Okay, this is my first entry. This is my take profit at this area. My second entry is at the break of this. And my take profit is here. This is how I scale into a position. 100 points. 100 points. Okay, boom. So my take profit is already hit. Done. Right here. We see price scaled in. Okay. And even on the daily, you could switch to the daily. And if you want to catch that little breakout that was here, you can, but you don't need to. Like, it's not about chasing every trade and swinging until kingdom comes. Like, you get a good trade, you get a good trade. Like, a lot of people focus on catching the big move instead of catching just a move, period. Like, you're focused on doing 300 pips, 400 pips. Like, forget 400 pips. Consistently focus on getting 100 first, or 80 or 70 points first, and then move on to doing big swings. Stop going above and beyond what you can handle. A lot of you just want to like get into trades and for there to be like big move, big move, big move, big move. The big moves come from you consistently doing the little moves first. Then you'll be able to recognize how to get into a big move. Okay? That's one, if you understand me. And what I mean by gold moves 10 per pip, how many people know what I mean when gold moves 10 per pip? Press 2. Yes. So it moves 10 per pip, which means every pip is 10 pips. Okay, and it kept going. Now, if you want to catch the whole move, you definitely can. But you would have to do the breakout of this structure. Okay? See? Took the breakout of this structure. Now I'm going to show you another move. I'm going to give you a totally different move. Look at the move what's right here, right now. Okay? Same exact thing. This is right now. Price moved up 278 points. Out of 278, 250 wick back. That's more than half. Okay? What am I going to do at this level? Okay? This is the highest point. This is the second highest point. Pardon me. And this is the third. This is the third highest point because this happened second and then this happened third. So this would be the third highest point, right? Now let's scale down. Okay. I like to use multiple time frame analysis. When I'm using this body wick volume, I like to use multiple time frame analysis to scale down and scale up to see what kind of position that I'm getting into. Okay. Now, is this a good setup to enter? Not as of yet. Not as of yet. I'm going to tell you where and I'm going to tell you why. Okay. Let's take a look at the past. So in the past, we see prices come here to 1786, right? We see the second time price came up here was 1776, which is lower. And then when the new trend started, it stayed below 1776 and it tapped 1780. So it just tapped maybe 30 points. It never came back up to 1787 and it ended up closing below 1777. So it closed below. So this should let you know that price is headed in the sell direction because price had a chance to hit here at 1787 and it didn't. It had a chance to hit here at 1781 and it didn't. I'm sorry, to go past this and it didn't. It had a chance to stay here and it didn't. It closed below. Okay, so now you're in a whole new level. Okay? Where you're gonna be putting your resistance. Now you have a main resistance zone. Your main resistance zone is to see if it goes up to anywhere near these levels. Anywhere near 1781 or 1770, you want to escape out of the trade. Even 1764, okay? As long as price stays below 1764 and 1776, we are going to see sells, okay? So numbers are 1781, 1777, 1764, okay? As long as price stays below here, I'm good to see sells. Okay. Now, where is my entry going to be and why? Okay. First, let's explain. You guys saw the zones that I put, the zones that I placed, and why. Okay. There's also major resistances here. Okay. Also, we could see 1775, weak line, broken through, and broken up. Okay, weak line. This didn't really hold too strong for the sell. It got a little clouded here, and then volume happened. Same thing here, a little clouded here, and then volume happened. Little clouded here, then major volume. Major volume, okay? Questions? Does anybody have any questions really quickly before I get into it? Okay, 280 out of 280.
¿Qué es?
Got 250. Okay. Now I'm gonna show you what else. What else made me choose this? Trend line. Okay. The trend line. So we got not only we have major resistance, resistance right here. Okay. Resistance also for price to come back up to this level. I'm personally would enter 1740. Pips, that's fine. I'd personally enter right below here. Yep, right below here. Now here is a little bit dangerous. I'm not gonna hold you. Okay, let me just do a little markup real quick. Okay. Here I would enter just for the sole fact that there is a lot of wicks in this area. So I'd rather enter below the wick and then get into the next zone. So my next zone would be here. That way I'm getting 140 pips. Now let's scale down. We could scale down and see how that position would play out. Okay. Everybody clear, press 1. We can move on to the next. Press 1. Beautiful. So nothing on the hour, right? I can't really find anything on the hour that would give me a reason to enter. So I like to look at lower time frames to find out where is a good place to enter. Okay, and I preferably would want to enter here. Now, if we look at 1739, where is that on the lower chart? That's right here. Right here is a good place to enter because it's below all this structure. And it's actually at a line where massive volume had broken through. So lets you know this level's weak. But it's still 140 something pips. Okay? Patience. I would have a sell pending order right there. Any questions that anyone has? Questions? If you have questions, press 2. No questions, press 1. what time gold moves, better big moves. We'll go over that tomorrow. But today I'm just giving you the intro of how I set up gold, how I set up zones, what I think about. Okay. Can everybody see why my setup is the way that it is?
And guys, if you have a question, you could unmute your mics and ask.
And if you want to use Haikanashi as well, you can. Haikanashi smooths the chart out so you can see the difference between that and Haikanashi. Okay.
I have a question.
Yes, sir.
So, when marking the chart, you start from the higher time frames and do you work your way down? Analyzing?
I'm sorry, say that again.
When you mark your charts, do you start from the higher time frame and then work your way down in your analysis?
Yes, sir. Yes, sir. That's what I do. I work my way down. So I see where price is at on the daily, 12 hour, 6, 4 hour, and then I work my way down and then I find a solid entry. This would be a solid entry to me because it's breaking below market structure and it's at a level where massive volume happened. It's not that, yes, volume broke through this level, period, but the amount of volume is what's very important to me. How much volume broke through? Does that answer your question?
Yes, thank you so much.
No problem.
What is the entry TF? Take
What is the entry time frame? The entry time frame could be any end. It could be the hour, it could be 3 hours, it could be 2 hours. It really all depends on where you personally see it. You could enter it on the 12 hour. No problem. But it's where do you see a good entry? Right? I personally see one on the hour. Right? Right here. I see one on the hour right here because it's below this structure. So as long as I can get it below a support level and at a resistance level right here, and at a level where price also broke through, that is how I enter.
She said, but higher the time frame, more drawdown.
That's not necessarily true. Time doesn't really necessarily exist on, like, these time frames are to throw you off. It's like basically saying the earth moved a few degrees and now there's a new bar on my chart. That wouldn't make sense, right? So time is really not the most important thing. It's really just price action. Where is the price action happening? Is it happening on a lower time frame or is it happening on a higher time frame? Okay. And how is it happening? 12 hour. I mean, I've entered trades off the daily and had zero drawdown or weekly. It's all about finding the break of the structure because if it's going to break here on the 12 hour, it's going to break like that on the 1, on the 2, on the 3, on the 4. It's just going to break like that overall.
And the last question is, do you consider order blocks? On the 4 hour, there is one at 1740.
All right. Yeah, I couldn't hear you.
Do you consider order blocks? On the 4 hour, there's one at 1740.
What is compliance? Oh. We don't really trade order blocks and stuff like that. We do not trade order blocks and things like that. It is common stuff. Most people I just need to order why, it has that name. That's okay. Maybe I unconsciously trade them, but I have traded for many years without having to use order blocks whatsoever. Okay. Questions?
Juan Cruz said, why don't you trade order blocks?
I already answered that question.
Any thoughts on ICT?
No, I don't really listen to ICT. I personally don't listen to it. Okay, awesome. So body wick volume. Here's it again. Two hundred points. Out of the 200 points, 123, 122 wick back. Is that less than half or more than half? 200 points. Out of the 200 points, 114 wick back. Less than half, more than half. More. High entry for this would be right above here. But look, support. Remember, gold respects support and resistance. Gold respects it. But look at this level of support. What else is above there? Another level of support. All these are levels of support. So when you look to the left, you see all these levels of support. Look at it. Levels of support. And they keep getting higher and higher. So obviously, the best place to enter is above this level of support, which is probably like right here. You enter in that level of support, and you take profit right here around this level. The reason why you take profit around here is because this is a support and this is a resistance. So boom, entry. Nothing happening yet. Done. Done, 150 pips. And look, notice price came right back down to the exact quarter of where we got out. Reason why we take profit here. All you gotta do the money side.
Dimitri, we can't hear you.
You guys can't hear me?
Your mic is lagging. I don't know if it's your reception.
How does it sound now?
Well, you have to keep talking, so.
Oh. How do I sound now? How do I sound now?
You sound okay.
Good?
Good on my end.
Okay. So, why I decided to take profit here? Do you guys see it? You know why I decided to take profit here?
Was previous support, so now it could be current resistance. So area of interest.
You see all these support levels? 1863 support. There's another support level. 1870, another support level. 1874. So you want to take it a little bit higher. Okay? Now 1876. Buy stop, take profit is 147. Boom, done. You see how that works? Why did we take that here? Because there was major support at this level. It was 174 points total, and it wicks back up 100 points. So that's more than half. It also never came back down to 1851. Notice price never came back down to 1851. And when the price started, there was a consolidation, right? The consolidation. You see buyers desperately wanting to push up. Okay, but we're not going to ever enter here. We're not going to ever enter right in on the resistance. We want to be a little bit more. And then we can take profit to the next level. Everybody understand? There's also exhaustion at this level, so you want to be very careful. A lot of people like to aim for the stars, and then they get mad when they only get to walk inside of the rocket ship. Okay. All right, perfect. Right here. Here's another one, another wick. 58 points. Out of 68 points, 55 wick back. Is that less than half or more than half? More than. So what are we gonna do? We're gonna look and give reasons why we believe this is headed down. I can tell you right now. $17.54, $17.47, $17.45, $17.40, $17.36.35. Why am I putting my levels here? One, this is the resistance level. This is another resistance level. This is where the exhaustion is. This is where the exhaustion is. So this is where everything current is, right? The breakout for price to go crazy, I mean, this is 90 points. But, you know, price moving past these levels are what's crazy. But yet it has not moved. It has stayed, since this was 1755, price has stayed lower. Watch, you have to track price, 1746. Okay. 1741, okay, boom, 1744, okay, 1735, okay. Now where is the next level and why? Okay, boom, look at this. Strong resistance. Now we're gonna break it down. Why would this be a sell? It's at 1736, now it's at 1731. As long as price, here's what you do. As long as price stays below this threshold of 1738, because this is the closest resistance to the next, as long as it stays below 1738 and 1736, I'm sorry, 1731, the trade will be fine, okay? 100 points. Let's scale down. Okay. Now, where would be the best place to enter? Maybe here, maybe here, maybe at 1728. Maybe that's a good place to enter because of, or 1726, because of this market structure. B. Let's go. right? Price hit. Okay, now, when you do it on the 15-minute, which sometimes it may take a while to play out, it takes a while. Versus if you do it here, right at the break, sorry, it was actually on the 3-hour. If you do it right on the break of where the 3-hour is, which is here, okay, your entry is still good. Yes, the price does go down for 50 pips, and then it comes back up to this level, which is nothing. That's fine. Okay, it's nothing, no crazy drawdown that you have. All right, which 17 pips is nothing. Price comes back down again, level, for 100 points. So 100 solid. Okay, now once this has broken out, you can trade it. You can trade this breakout right here. Another reason, just to give you a little heads up, why this broke out is because of this simple reason. Somebody tell me, what is one of the main reasons why this broke out? Tell me another reason. No resistance? No, not only that, consolidation. One of the main things you guys are forgetting is accumulation orders. Price is accumulating. Look at the way the candlesticks are falling, guys. Look at the way buyers are dying out. Right? They're dying out. Notice after they died here, they never came back up to this level. They just stayed here. They stayed at this level right here. 1732. They went up a little bit, 1733, 1732. But for the most part, it stayed below this level. That's why this was the best spot to take the sell anyway, even if it went back up here, who cares? It was the best spot to take the sell anyway because price came down and it hit this level. Okay, and this was where the weak vulnerability was. Because as long as price was staying below 1733 and staying below 1736, as long as it was staying below 1736, price was going down. So do you guys see how I set that up? First, I set my zones. First, I identify the body wick volume. Then I set up the zones. Then, I draw trend lines. And then I find the correct entries and exits. Okay. Everybody understand, press 1. Everybody understand. If you are really enjoying this lesson, or if you feel like you need a little bit more help, press 1 if you're enjoying, 2 if you feel like you need more help. Okay. Now I'm gonna play a little game with you guys. Who's ready? Who's ready?
Dimitri, it's 9:06, so the advance is coming up.
Okay. Buy or sell, guys. Buy or sell.
Buy.
Why?
Buy.
Rejection, the candle involved one previous.
What?
The previous candle basically involved
This candle or this candle?
that previous one, yeah.
Okay, so where are you going to take profit? Where are you entering? Where are you taking profit?
I would enter right there where the price is or slightly above, and I would stop somewhere near 1915, I believe, 1910 basically.
1910?
Yeah,
Okay, and do you see body with volume?
yeah.
Okay, let's measure it. Let's see if it's the truth. 139 pips out of 139. 100 with back, that's more than half, right? the trend line. Okay. Your take profit would be like 1910. I would personally take profit here, 1908, but that's fine, 1910. Let's see. Boom, nice. Nice, see that? 160 pips. Good job to here.
Thanks.
See, previous exhaustion, previous support, right? You see previous support level here. All right, support. Look at these supports, because you could see the support from the left going up, making higher highs. Okay. Boom. Right here. Why this level? Because this is the level of where support was happening. So price was climbing along with this. Price never went back down to this level of support. So as long as it moved up here, it's a good level. All right, I'm gonna get ready to head out, guys. Thank you everyone that got on today. Today was just a very small introduction of how we look at candlesticks, etc., etc. And now we're gonna be moving on to the advanced class. So if you guys are not in the advanced, definitely hop on the advanced. It's $750 to upgrade.
700.
700 to upgrade. And if you're really serious about your trading career, then hop on, guys. You only miss 100% of the shots that you don't take. So I would highly recommend you guys.
He's gonna be doing the strategies tomorrow. And Banera Lim wants to know, what broker do you use? Just wondering.
I use Vital Markets.
All right, guys. See you tomorrow.
Thank you.
You're welcome.
Sauce. God bless you.
Bless you.
Bless you too.
Thank you.
Thank you. Bye.
Bye.